Morning, everybody. All right, good afternoon. Sorry, for me it's the morning. So yes, good to see everyone. Let's wait for everyone to stream in. It's a very nice European countryside I'm in. So taking a walk. I thought want to catch up on my YouTube live stream and videos, which I am behind time. Oh yes, I should turn on my earpiece. Yes. Okay, give me a minute. See whether I can get this up. Okay. Hello, everyone. Just want to make sure my earpiece is up. Okay, give me a minute. Let me turn on my earpiece. Give me 1 minute. Okay, 1 minute. Good to see everyone. Okay, can you guys hear me loud and clear? Sound test. Sound test. 1, 2, 3. Sound test. Yeah. Sound test. 1, 2, 3. Can. Okay. All right. Thanks for doing a like and share. Thanks, Siu Ching. Yes. Okay. Thank you. Thank you. Thank you. It's a very nice countryside in Italy, actually. So I've moved. Okay. So I've moved from Zurich now to Italy. Yes. Okay. Cool. Okay, okay, good, good, good. It's actually a very nice environment. Let me show you. It's actually very nice. See the countryside, beautiful, right? Okay, it's a quite a nice countryside. Yeah, very beautiful. So I'm doing my morning walks every day. I clock. Uh, every day I clock about 12 kilometers or so in walks. Okay. Can you close up? I can't see your hair. Okay. I suppose my hair has some improvement. Yes, Italy is a nice place. All right, cool. Okay, now a lot has happened by the day. A lot has happened by the day. In fact, sometimes by half days. Maybe not to the extent of by the hour, but by the day. It's quite a lot. And it's a pretty serious environment that we're in financially, right? So if you have watched the environment, if you have watched the environment, it's a very unusual environment. Okay, a very unstable, unusual environment. By the way, I got all my notes here. Okay, and the reason why I'm doing this because I scared like the last 2 days that I got no last 2 or 3 days I got no time to do a live stream in the night. So I thought I could quickly catch the time right now. Okay, please give more likes so that people get to watch this. Um, the first thing is that we now have about four bank in crisis. Okay, four known bank crisis. We're not saying that that's the only bank in crisis, but this is four banks in crisis. Okay, yes, I'm in the countryside in Italy. Yes. Um, First, we started with Silicon Valley Bank. Then after that, Signature Bank. These two are regional banks, so not so jialat. But the big one that came down was not came down, but that got hit very badly was Credit Suisse. After Credit Suisse, then yesterday we have First Republic. So four banks so far. And do you think that these are the only four banks? I want to ask you guys. Do you think that we will see the last of the bank crisis? Okay. Anybody has any opinion? Okay. I I want to see. Okay. No, right? Yeah. Okay. Anybody think that the banking crisis is over? Okay. No. No. Good to see you, Charlie. No. No. Nobody say yes. Yeah. So this is oh, that's noisy here. Okay. Yeah. More. So I don't think the banking crisis is over. Yeah. Maybe you also said no. Yeah. So you see, if everyone here in Singapore don't think that the banking crisis is over, what about those people in Angmo country? You think that they will think that the banking crisis is over? No, right? They won't think that banking crisis is over. And if they don't think the banking crisis is over, what would they do? What would they do? I'll give you the scenario, okay? If you don't think that the banking crisis is over, and if your money is in those banks, what will you do? You will take it out, right? So when you take it out, what happens? You cause more bank runs. Yeah, you cause more bank runs. So this is actually an epidemic of fear. The worst thing that can happen is not bank crash. Bank crash is okay. Worst thing that happen. The worst thing that happen is there's a total loss of trust. Okay, with the banks, which is in some sense happening now. They are having more and more loss of faith in banks. So when you have loss of faith in banks, what happens? More bank runs will happen. And when you have more bank runs, then easily you have when you have more bank runs, then you have more bank collapses. So it's a liquidity crisis. It's not a banking crisis. Some of these banks are okay. They take a slightly more aggressive position with treasury bills and treasury bonds, right? But there's fundamentally, is it okay? There's fundamentally nothing wrong with what they do. Okay, so it's really quite an issue, right? So anyway, this is the situation right now. So we have a crisis of loss of trust. We have a crisis of loss of trust. We have a crisis of loss of faith. Okay, and then we'll have potentially more serious more serious. Let me give you how bank works. Okay, I think how bank works, and most of you will understand this. How does the bank work? Let me say, okay, if we have a loss of faith in the banking system, today the video very shaky. Okay, I walk slower. Okay, I walk slower. Okay, yeah, I walk slower. Would that be better now? Okay, wait. I thought the iPhone supposed to some video stabilizers. Okay. So let's put it that way. Okay, put it that way. Listen carefully. Okay, the bank borrow $10 from you. Okay, and then it keeps roughly $1, just in case people pull out money and things like that. So and he lends out $9. Okay, that's so the second. So can you see? I take $10 from you. I'm the bank. I take $10 from you, and I'll lend out 9. The $1 I keep for cash requirement and liquidity requirement. The second guy who took the $9 put in the second bank, and guess what they do with that? The second bank will keep $8.10. Okay, and lend out $7.29 or something like that. Okay, and then go on and go and go on. Yes, so this is what we call fractional bank reserve banking. Okay, it's this is exactly what we learn A levels, I think, economics or university first year. Okay, very basic, very basic, very basic banking 101. So no bank, no matter UOB, OCBC, DBS, you know, I know UBS, Citibank or whatever, no bank can tahan a sudden run on the bank, meaning that if all the depositor come, don't need all the depositors, 20% of depositors all come at the same time and pull out cash, that's it to the bank. Okay, so the bank key asset, what's the bank key asset? The bank key asset is not the money or asset they have. The bank key asset they have is trust. The bank key asset that they have is trust. Have the faith that in the event that money is needed, the depositor can get it. Okay, so what we have right now is worse than financial than a financial mismanagement of the bank. Is a loss of confidence in the bank, right? So now I don't want to over exaggerate it at this point of time, but clearly every one of you never see one person that say that, oh, the bank crisis is over. Not one person say that, right? Almost every one of y'all said that, oh wow, we think that there is potentially more banking crisis. Okay, that's my view as well. But I don't know, and we all don't know how serious the environment is. Okay, and there's the reason why I'm walking left and right. Yeah, it's because this part got shade. Okay, this part got trees. This part got trees covering the entire path. The rest of it is really bright. It's burning my skin. Okay, yeah. So it's a very weird situation right now. And you're right, because now they have lost faith in the bank, a lot of them switch to crypto. So there are some winners and losers. I wouldn't be so gutsy to bet on crypto. Okay, number one, I'm not familiar. Number two, they don't have very good track record. Okay, so I think that basically gives a position of where things are. Okay, now let's talk about interest rate, shall we? Interest rate. Interest rate, interestingly, is really the root of all problem right now. Okay, interest rate, the high interest rate is actually a root of all problem. Because of the high interest rates, the treasury bonds prices went down, and because most of the bank hold treasury bonds as part of their asset requirement, and or they just keep this asset, a lot of them fail. Okay, so it is the root of all problem. Now, the European Central Bank just increased their interest rate by 0.5%. A lot of people say that, oh, Jerome Powell of the Federal Reserve will take the cue from there and also increase by 0.5, if not more. Uh, Not quite the same. Okay, not quite the same. The European Central Bank has to increase more for two reasons. Number one, their interest rate is lower. Their interest rate is lower. And the second thing is that their inflation rate is higher. Their inflation rate across Europe, I think, is about 8.5% right now. The inflation rate is differs a lot from country to country. Some countries even near 10% or 9%. Some differ from one to another. But generally, their inflation is higher than US. US now is at 6%. Their interest rate is lower than US. They're at 3% where US is at 4% right now. So their interest rate hike have to be higher. Jerome Powell and his Federal Reserve Open Market Committee is going to meet this coming week. This coming week, we are. Some people ask me, so Mr. Lu, what's going to happen? This is my take. I could be wrong. This is my take. I think Jerome Powell will still increase the interest rate by 0.25%, but he will have a dovish tone. Okay, he will not say, "Wow, Lim Pei is going to get whack the inflation until the job is done." Blah 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 blah. He's going to basically say that, "Okay, guys, a few things that's happened." Okay, as you can see right now, our policy are working. Okay, the current situation right now is that the inflation clearly has been coming down substantially. It's not enough. Yes, there's some job market tightening. Wages are still high, but it's working. But he cannot say too much because he's now scared that by the way, he's the root of all these problems. I mean, he, as in the Open Market Committee, Federal Reserve Open Market Committee, is the root of all problems. They went to increase interest and cause all these banks to have trouble. He's going to say, oh, okay, inflation is coming down. Looks like the capital market is really constraining. So we don't do too much. So 0.25%, and most likely we don't do too much anymore. Okay, so I think they're gonna say something along this line, a dovish tone. On this note, I want to digress a little bit to talk about a very important thing. The whole capital, Matt, you see you, the whole capital market is now contracting. All the banks right now. If you are running a bank right now, what will you do? You still there to lend out money a lot, not? Will you be very aggressive? Or you, in your mind, you scared for a bank run, right? What will you do? You will keep a lot of cash. You will tell this lender, oh, tell this borrower, hey, I think your requirement not good. You want 1 million, I give you 200,000. Another guy say, credit score no good. I don't want. This one, you don't have asset. No, I don't want. That kind of thing will happen. So what is going to happen right now is that, not it's going to happen. It's happening right now across the world, guarantee. Even Singapore, the capital market is contracting. Okay, it's contracting right now. So we now actually have in that sense, a liquidity crunch right now. The banks don't dare lend out too much money. What if they are suddenly all the depositors come and ask for money? I told you, right? There is no bank, zero bank, no matter how good you are, how reputable you are, not UOB, not OCBC, not DBS, not Citibank, not Bank of America. If all their depositors rush in to withdraw, everyone will collapse for sure. Okay, so we must have enough cash to protect now. So therefore, what's going to happen? Is that a lot of banks will start pulling back their lending. So that's effectively a contractionary policy. So the Federal Reserve don't need to do too much. The whole market is really constraining. So can you see what's going to happen next? Can you see what's going to happen next? What do you think will happen next to the world economy? Anybody? Let me tell you what's going to happen next with a high certainty right now. Yes, recession. Yeah, recession. I've never used this word, okay? I've never used this word for a long time. I've always, in that sense, be an optimistic person. But I think a recession is coming. Already, the market has gone down quite a lot. Now, with this hit, I don't think we can siam for a recession. I think a recession is in the horizon. I cannot say with 100% certainty, but the signs are very leaning towards it. Okay, you look at Singapore, 5 months, our exports are down. This is Singapore. Some people say it's okay, I export only. Our export is 1.5 times our GDP. Our national income totally dependent on our exports. Our exports been down for 5 months. Hey, that's a lot, Year on year down for 5 months. How many of you in your company are doing business? Really, you can see some signs of going down. Any one of you can see some signs of going down? So now, fortunately, Singapore is a very strong country, but I think we can actually experience some slowdown already. So I don't think we can siam from. I don't think we can siam from a recession globally. Okay, yeah. So yeah, so actually, yeah. Let me take a look at my notes just to make sure I don't miss anything. Okay. Now the question really now is, what will happen moving forward, right? What will happen moving forward? Okay. I've got a few scenarios that I want to discuss with you guys. Okay. So scenario one, okay, is that no more banking crisis, no more black swan. Okay, no more black swan. All the things that regulators done, the rest of the bank have done to help a financial institution is okay. Okay. The scenario is scenario one. Okay, scenario one. Everything is calm, good, and okay, and things like that. That's scenario one. So that's the end of the banking crisis. No more black swan. No more. No, the black swan meaning that there are unexpected, new things that come out. Okay. Okay. So how many people believe that will happen? Okay. Say me or not me. No more black swan. Peace from now on. Perfect. Even in that scenario, I think we will still have some credit crunch. Okay. So that will probably be a mild slowdown. to a milestone, probably a very low economic growth, or very low economic growth, or very mild recession. Okay, very, very mild recession. So that's scenario one. Okay. The frank truth is that we don't know. The fact that it's called black swan, the fact that it's called black swan means we cannot predict, right? Hey guys, there are less than 1/5 of you are given a like. Can you please help me give a like, please? It's like almost like very depressing. Yeah, it's very depressing to see nobody give a like. Okay, yes. The second 86 of you give a like, there are 500 over you. Uh, I think that's something I asked from you in exchange for these notes. I did quite a bit of research on this. The second scenario, okay. Let me take a look at my notes. Okay. The second scenario is that there are, there are more black swan that come out. Okay, there are more black swan come out. So it's flip the other way. Big, huge black swan that come out. Okay, big, huge black swan that come out, and these black swans will hit us again and again, and they'll come in different magnitude. And the government has no, it will try their best, but they have little control. The whole country, the whole economy of the world go down into shambles. This will be a great recession, not far away from the 2007 2008. It will never go down to 1929 kind of Great Depression, but we're talking about a Great Recession. This scenario number two, okay. I don't know how many of you will believe that will happen. And to be frank with you, it's hard to tell. So there's basically a widespread loss of confidence. All the banks pull back their lending. Bank runs, more crises, hit from all sorts of direction. We don't know what happened, and so on. Okay, I would say this is the scenario number two. Okay. Mhm. Scenario number three is basically a middle of the road. We have some crises along the way, but the government come in big time, make a lot of guarantees, inject a lot of funds, do a lot of rescue program and things like that, and manage to just stamp uh, all these things. Okay, so how where okay, so this is basically scenario one is optimistic, scenario two is pessimistic, and scenario three is the middle of the road. Okay, can you all just type one, two, or three? One is good, two is bad, three is in between. Okay, which one do you think will happen? Okay, let's type now. Okay, I want to see a vote. Okay, as your vote, remember, give a like. Three, 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 one, three, two, three, 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 two, two, three, 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 three. So okay, majority will basically have a middle of the road. I feel that after the 2007 to 2008 financial crisis, I think the governments are now smarter. Okay, the government are now smarter of how to handle this kind of financial crisis. Okay, so this time around, you notice they are a lot faster, a lot more preemptive, and they deploy the right thing. So they stop the loss of confidence. So in that sense, I'm in line with everybody's thinking that scenario three happened. But this will basically means that if scenario three, is what's going to happen, then it basically means there's a hell of volatility. We already see that over the last 1 week. The market go up, then down, then up and down and up and down. Wow, every day. And it all go back to the same place. The three at 3,800, 3,900 points for S&P 500. I think that scenario three is most likely going to happen. So let's ask the next question right now. So, Mr. Lu, what's going to happen to the stock market? Okay, what's going to happen to the stock market? Stock market is a little bit different. Yeah. The problem is that right now you cannot predict what's going to happen in the stock market. So the stock market, okay, the stock market is the whole problem of the stock market is all because of inflation. I can assure you, if all these crises happen, inflation is going to come down like a meteor crashing in the earth. It's going to come down because a lot of people pull back their spending, all scared, right? So, so I think if that were to happen, inflation is going to be over. It's going to be over really fast. So in that sense, it's an upside. But there's nothing to celebrate. The upside come because of a bigger monster. So at this juncture, I really cannot tell whether the market is up or is going to be up or down. Someone wrote and misquoted me and said that, oh, Mr. Lu say that don't worry, there's nothing to worry. I think there's a hell lot to worry. Okay, but there's no need to overreact and panic and do crazy things like buy or sell things. Okay, so I think what I'm doing right now is to watch and see the market and see whether there's big occurrence and see whether government regulators will come in to save the day. It is at the first sign that things actually crack and broken. I will first clear some of the more risky assets I have. I do have some leverage positions. I personally will not touch my S&P 500 and Nasdaq for a long period of time. Those have survived through world war, survived through pandemic, survived through economic recession. Those I'm not worried. But there are some assets of some portfolios of mine can go to zero one. Those I will clear. Okay, that's just me. I didn't tell you what to do. I'll tell what I'm going to do. Okay. I will not take up any serious position right now. And very important is that a lot of people is going to rush into big expenditures and give me a minute. Okay, big expenditures, buy houses, buy cars, the kind of thing. The rest of it, I think, is okay. You know what? I will avoid those things. I'll avoid those things. Yeah. Even my Malaysian house, me and B discussed. I think we can hold back for a while. Okay. I hold back is largely because the if this thing will happen, the prices will come down. Then why become the idiot to buy the house at a high price, right? So there's no rush. From me now to retirement is like decades, right? So I got a lot of time to go and decide when to buy it. So I don't think there's a rush to do that. Yeah. So thank you. Don't worry, this countryside road is very, very safe. You see all the cars that can see me from afar. I wave at them and they all wave at me back. People here are very, very friendly, not like in the cities and things like that. Yeah. So so I think this is what I think I'll do. Okay. Um, the outlook doesn't look very good, but there's no need to overreact. I'll watch and see whether the environment will have drastic change or impact before I decide what to do. Okay. Um, but you know what? I've been through 1997, 1986, 1987 10 electric crisis. I've been through it as a young boy. I didn't remember too much. 1997 Asia financial crisis was really bad. 2001 dot-com bust was bad. 2003 Bali bomb blast was bad. 2007, 2008 Great Recession was really bad. 2012 Europe debt crisis was bad. 2015 China stock market crash was quite bad. 2020 SARS, sorry, not SARS, sorry. The COVID-19 crash was bad, really bad. This one is just another one, okay? I think there are opportunities that come. So 2003 SARS, sorry, okay. So fortunately, I still have reserves. If you recall, the last shots I fired, or most of them, buongiorno. The last shots I fired, most of them are all from my CPF and SRS. I still keep a healthy stash of cash. So if the crash were to come in a big way, I'll start unloading cash. Yes. Okay. Yeah. So, but now there's no need to overreact. We don't know whether the market will go up or down. It's very difficult to tell. Okay, I'm not going to predict. Uh, and there's a lot of volatility. Uh, try not to overreact at this point of time. Okay. So all right, cool. Okay, let's take some questions right now, shall we? Okay. Yeah. Uh, okay. Let's take some questions right now, shall we? Or have some discussion points. Okay. Someone asked me, have I fired my shot? No, no, no. There's no need to. Voila, be hot. Okay. There's no need to at this juncture because the market is still very uncertain. So I've decided I can afford to wait and watch and see. Right now I'm in a countryside in Italy. It's a pretty nice countryside. There's a nice barrier of trees here to stop the sun from burning my skin. Yes. Someone said, Yellen said no bailout. You believe or not, Mr. Lu? Yeah, it's effectively a bailout. Lah. What no bailout? Utter rubbish. Job market in Singapore will be affected. I'm sure it will. Okay. I'm sure it will. I cannot tell you whether it's drastically, but I'm sure it will. Okay. If you are holding Bitcoin right now, you'll be cheering yes, because right now is a situation where the Bitcoin are actually designed to do, right? To save people from a banking crisis, a Bitcoin will be there. But however, you know what? As fast as it can go up, as fast as it can come down, I'm not going to touch Bitcoin. Okay. Mr. Lu, can you perhaps just discuss possible opportunity in such banking crisis? Well, if scenario 2 were to happen where it turns really bad, then I'll just then I'll just go in, right, when the market crash. I think we can afford to wait. I think the banking crash. Wait, I think the banking crash will come only if we have a total loss of confidence and some seismic kind of bank collapse will happen. So I don't think so, lah. Okay, that's scenario 2. Scenario 1 is scenario. Wait, scenario 1 is up there. I can't remember scenario 1 or 2 already. Anyway, next. What he says here, Mr. Lu, is wise not to buy any assets for next 15 to 18 months. Okay, I'm not too sure about that, but I certainly think it's wise to watch and see. Okay, yes. Do you think this is a repeat of 2008? Hard to say. It could have been, but the government and regulators now are smarter from the experience of 2007, 2008. Okay, so they know how to handle it to avoid the mistakes of 2007, 2008. 2007, 2008, the government came in too slow, caused a huge damage. So they now know better. And the best part is it was just in 2007, 2008. So it was about 15 years ago. A lot of the current regulators were younger then. They were still on the job. So they have seen their memory of what happened. Yeah. So I think it's okay. Okay. You have a target price to enter S&P 500. I don't like the target price, but I like to look at more the environment. Okay. I like to have a time where everybody feels that it's blood in the streets. And yet I could see that, okay, it's blood now, but I can see that now, there's no more downside. Okay. They may not have upside, there's no more downside. This is where I go in. I usually go in when I see there's no more downside. But now it's very difficult to tell. Yeah, now it's very difficult to tell. Do you think bank runs are likely in Singapore or Malaysia? I don't think so. Malaysia, I don't know. In Singapore, I don't think so. Okay. Malaysia, I met a few very powerful businessmen and politicians. Malaysia has one super cash cow which very few people know. The cash cow is called Petronas. It's literally oil money. So Petronas is like really generating a hell lot of cash and cash reserve. So I don't think that it's going to happen. You think about it, nah? Malaysia has gone through 1MDB, which siphons away so much money, right? And yet the country is still so rich. I go there in Malaysia, I don't see them poorer. Yeah, everybody is still spending like crazy. Houses prices are going up. So no. I don't think so. So I personally don't think so, but I'm not that familiar with Malaysia. Singapore, not a chance. Yeah, not a chance. The last time, 2007, 2008, um, I think we set aside a few hundred, $100 billion to protect the banks in case the bank run, but you never get to use it. Yeah. Do you think bonds is good now? Bonds is excellent right now. Okay, excellent right now. Bond prices are going up. It's funny that these few days the stock market going down. My total portfolio actually went up. That's because the bond prices actually went up. So my bonds are there for a reason. My bonds are there to hedge against this kind of event. So they have performed their job really well. So I'm a bit thankful, but I'm also realized that in a major event where there's a total loss of confidence, both bonds and equities will go down. Yeah, I've seen that happening a few times already. Okay. Do you buy gold or properties to hedge against equity? I don't have gold. I don't have properties, but I use bonds to hedge against equities. Okay, that's a very textbook answer. Will SGD go up? I can't tell. Okay, no, we're not in Australia. This is in Europe. Yeah. Singapore bonds, I think, is fine. The Singapore government bonds are very safe. But Singapore government bonds don't go much up and down. I don't even know whether you can trade Singapore government bonds. Most people will hold it, T-bills, most people hold it to maturity. So it's not for that purpose, it's not for hedging. Our property market will be multi-segment. Yeah. I actually think that our Singapore property, quite a large part of it will go down. Maybe the central one, those in the city, real hot city, Rio Valley, Orchard Road area, CCR area won't go down as much or won't even go down. But those in the outskirts, whatever, I think all of them will go down. Yeah. So this is my view. Okay. I could be wrong. Okay. Thanks, Yu Qing. Yeah. So okay. So I think that in a nutshell, that's what I think will happen. So these are the scenarios. Do I think that it's a bad situation? Yes, I do think so. Do I think that there is the need to panic? No. Is there a need to take action right now? No, I don't think so. But watch and see very carefully, very strict, close watching. At the first sign that there is a crisis that's uncontrolled, okay, cannot be rescued by the government, I might first clear off my high risk portfolios. Yeah, I wouldn't touch my S&P 500 or Nasdaq, and certainly not touch my CPF. Okay, cool. Can buy banking stocks right now. I can't tell you what to do because I think we're already in the early stage of this banking uncertainty and volatility. Yeah. Okay. Yes. All right. Cool. All right. Good. Okay. So let's watch and see whether the what will unfold next Wednesday. See whether what I say will come through. The Jerome Powell will increase the interest rate by 0.25%, and he will deliver a dovish tone. Okay, and basically say that okay, we're not overdo it. Yes. Where am I walking? I'm in countryside right now, Europe. Yes. Okay. Cool. All right. Good. Okay. Well, in this angle, my hair looks like a lot. Okay. From the economic view, what happened when interest rate stop increasing? If the interest rate stop increasing, I think the stock market will have a bull run. Yeah. Any health tips? Oh, okay. Okay. Are you okay if I stop now and talk about health a little bit? I just got this new interesting insight. Now, some of you guys may know that I talk about this many times. I used to be 90 kilogram, okay, and then I lost it. Now I'm 73, okay, and now is effectively mid of March, right? So I've lost. This is my 2-year anniversary because I started exactly losing weight in mid of March 2 years ago. So I successfully hold on my weight loss for 2 years. And and I was watching watching a medical doctor describing it, and I didn't realize I was actually the reason why I managed to hold my weight loss. How many of you have actually lost weight, but in a short while you gain it back? Okay, so you may not know, but all of my whole life I've run, I exercise rigorously. I've got this idea there's no pain, no gain. Meaning that if I don't have pain, I will not have gain. Sorry, I'm gonna have losses in my weight loss. So my whole life I've actually tried very hard to exercise. I run a lot, but interestingly, uh, because I'm so fat, I couldn't run. So I actually walk. As you can see, I'm walking right now, right? So every day for the last 2 years, I walk roughly about 11 to 12 kilometers a day. A lot of people don't believe it. That's so be it. Okay, and now that I'm talking to you at night, I can anyone. Some people stay around my area in Toguan. They will see me walking a lot during the pandemic and so on. And in Europe, I walk a lot as well. For for weight loss, this is very interesting. If you run, it actually turned out that if you run, you actually turn out that you burn a lot of sugar, and actually the body after the running will cause you to have an increased appetite to want to replenish back the sugar in terms of carbohydrate or actually sugary stuff. You cause a lot of craving. So very tough, hard exercise cause you to eat more of the sugary stuff. But if you like me walk and walk and walk, the body will burn fat and not cause you to have craving for all those sugary and carbohydrate stuff. So then I realized that, oh, okay, one of the reasons why I could maintain my weight loss, okay, is actually my walks, which I walk a lot, which I'm demonstrating to you. Now it's about 42 minutes in the video. I've been walking nonstop for 42 minutes, right? So very effective. Then I realized, oh, the reason why, okay, the reason why I am able to hold on to the weight loss is because I walk a lot. Yeah. To lose the weight, I have to use intermittent fasting and diet control. But to hold on to the weight loss, it's all about walking. Yeah, walking, walking, walking. And walking is easier. It's less damaging and things like that. Yeah. Okay. Okay, cool. Okay, I hope this little health tip will help you guys. I want to inspire you. You know what? You just go and watch some of my videos 2 years ago. Okay, just watch some of my videos 2 years ago, and you will see my look and now compare my look now and compare my look 2 years ago. You know what? Even I cannot tahan my own look. It's disgusting, man. It's disgusting. It's fat, bald, and ugly, and everything. Bleh, pui. It's so disgusting. Right? Now I look at myself. I'm happy with myself. I hope to inspire more of you to have good looking. You can look slimmer, thinner, younger, and healthier. This would be the ultimate wealth. Okay, this is ultimate wealth. Trust me, you can have millions of dollars and your health is shit. There's no use, right? So I hope to inspire all of you uh, to uh, to to have a great success in your health as well. Yeah, and it really doesn't it really doesn't cost money. Yeah, yeah. Can you show you a pack of 6 or 8? No, I don't have. Sorry, because I don't do a lot of exercise on my apps. You share about walking, and I copy your daily routine and following your footsteps. Ethan, great, good for you. When you get results, please let me know. Okay? Yeah, intermittent fasting to lose weight, low carbo meal, okay, and lots of walking. These three, and then of course, great facial products, to beauty products to help you look better, and my hair, yes, okay. Yes, some people say I very hiao. Yes, I'm super hiao now. I'm not going to be ashamed of it, okay. Super hiao now, and I want everybody to look better. I'm not asking everybody to look like Andy Lau, but from where you are, I want you to look better, okay. Yes. All right, cool. Okay, thanks for the time. I hope that you guys appreciate the talk. Remember, give a like. Okay, Ken. All right. Okay. So with this, I've walked for 45 minutes already. I'm gonna walk for another 15 minutes or so. Thanks for joining me. And I'll see you again in tomorrow or so. Okay. Okay. Good night. Okay. Good night. No. Good day. Have a great day. Okay. Any cold weather tips since you are traveling so often? Planning December to Europe. Oh, get a down jacket, man. Very, very important. Even now at night, it's still freezing cold in Europe. Yeah. Okay. Good night. Good day, everybody. Have a great weekend. Spend great time. Okay. No need go worry about the stock market. Very worry yourself. Cool. Okay. Great. Okay. Super fam. Good to see you. Okay. All right. Cool. Okay. All right. Good. Okay. Keep healthy. All right. Cool. We'll see you guys. Okay. We'll see you guys. Bye bye. Bye bye.